Well, thanks for tuning into the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and it doesn't promise to be a good morning. Let me put it that way, and not a bad morning also. I think the markets are a bit quiet, but the coronavirus cases are spiraling out of control. We almost back, maybe not in terms of numbers, but in terms of how they are hitting the peaks across the world. Uh, in all geographies, really. I mean, India may be a different case in point, but Europe, conversations and articles on Bloomberg.com, etc., show that the cases are really spiraling. This is, the cases getting confirmed each day, and as you can see that the virus is hitting new peaks. In the US, it was some 85,000 cases, I think, yesterday or day before, if I'm not wrong. So it's not looking all that great when it comes to the virus. And mind you, as much as we have control over, maybe some control over the medicines that are administered, etc., and maybe a more adept at dealing with this. If it's front and center in the US and Europe, that is where the money flows in for the markets, and therefore that should be a concern. Now, the Dow futures, irrespective of what the US markets did, and they'll come up on your screen in a bit, which is what the US markets did on Friday, and they were okay, but the Dow futures are trading in the red, and presumably because of these news flows around the virus, as a result of which Asia too, I think, should be starting off weakish. Now, keep in mind, I think the virus is having its impact on all data points as well. This is, of course, what Asia is doing, as you can see, and mixed bag, some green, some red. But there is this chart on Bloomberg Terminal, which shows about how the virus, presumably again, is impacting the PMI of European services for sure. And I think a lot of question marks about when are these service points collected, etc. I'm not an expert, Ida is really, but still, I'm just laying it out that this is what the articles make out to be, that while the data is inconclusive, it is certainly having its impact. We can see it in the way, right? Spain has put in a new lockdown, even though it's not during the working hours, but there's a lockdown in place from 11 p.m. to 6 a.m. So I think we're seeing sporadic signs of these appearing across the world, and that shouldn't augur well for sentiment. But remember, just keep one thing in mind: at the back of all new market moves would be the US stimulus, and if a deal is reached there, that could be a positive. Now, very quickly, the trade setup for the day today. I think what the Nifty did last week was a bit of a surprise compared to what the rest of the regional markets have done. So 1.4% rise in last week, presumably led by the FI flows, which have continued to come into the Indian markets, as a result of which India did very well compared to regional markets like most other markets except for maybe Philippines, etc. So that was one key point. The global COVID cases are ballooning, as I said, and that probably would temper the optimism. And I think there is a case for defensive sectors to make a bit of a comeback. We've seen IT and pharma lose out big time in the last few days. And CNX Pharma, as I've stated, is now down about 9% from its peak in the month of October. So there's a case for the defensive spaces to make a bit of a comeback. But while the foreign flows are coming in, BFSI remains center stage. So keep that at the back of your mind. Speaking of BFSI, I think that space in India will certainly be in focus today because of news flow surrounding Kotak Bank and IndusInd Bank. Let me get in Ira, my colleague, to come in and talk about her opinion on what this could mean. Now, Ira, as always with every deal, presumably, this is still inconclusive, but good morning. And what do you make of this news flow?
Very good morning, Niraj. We'll start with the health warning, and the health warning is that Kotak Mahindra Bank spokesperson declined to comment on this story, and the IndusInd promoters and the bank have strongly denied all the rumors. Nevertheless, what Bloomberg News reported last evening was that Uday Kotak and the Hinduja family have indeed had initial discussions, and the discussions are veering towards a possible all-stock acquisition by Kotak of IndusInd Bank. Now, we don't know whether the deal finally concludes. Both the story and the comments coming in from the respective party suggest that it's not an outright conclusion. But it is an occasion to talk about what the deal could mean for the two lenders should it actually go through. I'll start with the fundamental aspect for IndusInd Bank. Remember, obviously, we are way too early to talk about swap ratios, etc. So from a stock perspective, I have no value to add. But from a fundamental perspective, I think should the deal go through, it would be a little bit more positive for IndusInd Bank. Remember, IndusInd Bank went through a bout of asset quality concerns. There were concerns about some of the more aggressive corporate lending that they had been doing. Then in came a new CEO who was consolidated over the last few quarters, and that has gone down well. But there's been a certain amount of unease. Moreover, there's also been a question about where IndusInd now finds its next niche. It had found its niche in that aggressive fee-based structured corporate and mid-corporate lending. But if they are pulling back from that on asset quality concerns, then where do they find their next niche? They've also had some sort of little bit of tremors on the capital raising front. The promoters seem to have suggested that they wanted to raise their stake to 26%. Again, Bloomberg reported that the Reserve Bank of India did not permit that, so they stay at 15%. The bank managed to raise capital from investors, including Route One, so they're at a very comfortable 15% plus capital adequacy ratio. But certainly, in the years ahead, should they need to raise more capital, they'll now need to keep going back to the market. So from an IndusInd Bank perspective, should the deal happen, it'll do two things to them. One, it'll bring them into the fold of a promoter which has its own heft in the banking system. There are few who have the kind of heft that Kotak does. And of course, it'll help them move a step above the 3 lakh crore balance sheet size, because you can keep growing with the system, but do you manage to get a larger share of the system? And if so, how? That's a question mark for IndusInd, and perhaps those questions would partly get resolved through the deal. In the case of Kotak, I think everybody who's watched Kotak grow knows that they have no sort of burning desire to grow or gain market share. But then the promoter is, sort of astute enough that when he sees growth at a reasonable cost, he'll jump in and pick it up. He did the same with ING Vyasya Bank. It was a bank similar to the size of Kotak back then. They did an all-stock deal. They absorbed it. It took them about 4 to 6 odd quarters to clean up and bring it in line with the Kotak standards on asset quality, etc. But it did help them move one step higher. Again, a deal where you have a 3 lakh crore balance sheet plus a 3 lakh crore balance sheet will take you to about a 6.5, closer to 7 lakh crore balance sheet. They still remain number 4 if the deal does happen, but they come a little bit closer to Axis Bank, which is upwards of 8 lakh crore, actually closer to 9 lakh crore. So they will still be number 4, but they'll be a closer number 4. And then, of course, they can go in and grow from there. That's as much as we can say about this at this stage, Niraj, because beyond that, swap ratios, when it gets announced, etc., will determine, I suspect, how the markets really respond to the deal.
Thanks, Ira, and much appreciate you giving us this lowdown, and I'm sure it helps viewers. Keep in mind, viewers, the health warning that Ira stated, that both groups have declined to comment, or in fact said, I think IndusInd Bank has said that it's malicious or whatever, essentially denied the rumor. Thanks, Ira. Thanks for joining in. So viewers, keep in mind, these two stocks remain in focus for more reasons. Just one, of course, but the primary reason being the story that Bloomberg reported. Aside of that, are there other things that we should quickly focus on? So, yep, Future Retail and Reliance, right? There we know that something has happened. So Amazon has won the order to stall 3.4 billion Reliance Future deal. Is as per Bloomberg. Arbitration court in Singapore restrained the Future Retail and founders from going ahead with the sale of assets. Now, this points towards a bloody battle. Let's simply put it that way. Now, I don't know whether when the two elephants fighting, do the other animals, which is the Future Group assets, get crushed in the process, remains to be seen. But yeah, this could probably have a bit of a bearing to them, more so on Future Group assets or Future Group listed entities, but maybe RIL too. It's been a stock that has corrected a bit. Maybe that could be some more reasons. Let's wait and watch. Reliance, to its effect, to its credit, or rather from their side, came out and said that we are going ahead with this because this is as per law, etc., etc. Typical Reliance. So let's wait and watch how it happens. Vedanta could be the other one that could get impacted today. The board has approved the first interim dividend of just 9.5. The expectation was of a much higher dividend, and therefore I do believe that Vedanta could have a bit of a downside in the session today. Let's wait and watch. JSW Steel, the numbers looked a solid beat compared to estimates, really. Revenue is okay, but the bottom line numbers, the EBITDA numbers, way higher. I think I was looking at a Jefferies note which stated that this was a very strong beat. We don't need Jefferies to tell us. The estimates tell us that. The reasons ascribed thereof look very, very promising. And this could be a very interesting morning for JSW Steel in particular, even if the markets are looking a bit quiet. So do watch out for this one. Lots of large numbers, viewers. I'll stick to the large ones because I obviously can't tell you everything. But very quickly, Tech Mahindra, another set of numbers, look very promising. Revenues marginally higher, difficult to beat revenue estimates on that base and with the analysts pricing in. But again, the margin uptick was quite solid. The net profit beat, pretty interesting, very reasonable. And the valuations, right? It trades at 15 times. HCL Tech trades at 17. I mean, forget TCS and Infosys, they're trading at northwards of 20. So I think there's valuation comfort when it comes to Tech Mahindra, and therefore that could see a bout of buying in the session today. I suspect it could see. Let's wait and watch. Nestle is the other one. Very quickly, the net sales grew. Domestic sales increased 10%. Motilal Oswal says that the volume growth, according to their calculation, is 12%. So this is Nestle getting back to solid volume growth, and this should augur well for even an expensive stock like Nestle. Let's wait and watch. The news flow is positive, could react positively. Tata Motors, as per a PTI story, says that they're actively scouting for a partner for the passenger vehicle business. This is big for Tata Motors, viewers. Watch out for this one. The other stocks in focus are Polycab and Subros and Alembic Pharma. All three of them came out with very interesting numbers, particularly Polycab, but which is expensive, and Alembic Pharma, which is also expensive, but very solid numbers by all three of them. Polycab could be a positive reaction. Lastly, viewers, watch out for Aurobindo Pharma. And I've given the graphics, but they've done a sale of a US asset. It could make Aurobindo Pharma net debt free, and therefore that stock could well turn out to be the stock of the morning. So therefore, a bunch of companies to monitor and a bunch of companies to trade. Happy trading to all of you. Thanks so much for tuning in.